Greetings and welcome to UiPath fourth quarter and full year 2026 earnings conference call. At this time, all participants are in a listen-only mode. A question and answer session will follow the formal presentation. If anyone should require operator assistance during the conference, please press star 0 on your telephone keypad. Please note this conference is being recorded. I will now turn the conference over to Elise Furlani, Head of Investor Relations. Thank you. You may begin.
Good afternoon, and thank you for joining us today to review UiPath's fourth quarter and full year fiscal 2026 financial results, which we announced in our earnings press release issued after the market closed today. On the call with me are Daniel Dines, Founder and Chief Executive Officer, and Ashim Gupta, Chief Operating and Financial Officer, to deliver our prepared comments and answer questions. Our earnings press release and financial supplemental materials are posted on the UiPath Investor Relations website. These materials include GAAP to non-GAAP reconciliations. We will be discussing non-GAAP metrics on today's call. This afternoon's call includes forward-looking statements regarding our financial guidance for the first quarter and full year fiscal 2027 and our ability to drive and accelerate future growth and operational efficiency and grow our platform, product offerings, and market opportunity. Actual results may differ materially from those expressed in the forward-looking statements due to many factors, and therefore investors should not place undue reliance on these statements. For a discussion of the material risks and uncertainties that could affect actual results, please refer to our annual report on Form 10-K for the year ended January 31st, 2025, and our subsequent reports filed with the SEC, including our annual report on Form 10-K for the year ended January 31st, 2026, to be filed with the SEC. Forward-looking statements made on this call reflect our views as of today. We undertake no obligation to update them. I would like to highlight that this webcast is being accompanied by slides. We will post the slides and a copy of our prepared remarks to our investor relations website immediately following the conclusion of this call. In addition, please note that all comparisons are year-over-year unless otherwise indicated. Now I would like to hand the call over to Daniel.
Thank you, Elise. Good afternoon, everyone, and thanks for joining us. I want to start by thanking the people who made this year possible. Our employees who executed with discipline and purpose, our customers who trust us with their most critical workflows, and our partners who have made a genuine bet on our platform. This is a team effort, and I feel that every day. We delivered another strong quarter, beating the high end of our guidance across all metrics and closing out a year of disciplined execution. Fourth quarter ARR reached $1.853 billion, up 11% year-over-year, driven by $70 million of net new ARR and revenue of $481 million, up 14% year-over-year. Alongside that growth, we've achieved full year GAAP profitability for the first time in our company's history. We grew fourth quarter non-GAAP operating income to $150 million, a 31% margin, a reflection of the operational progress we made throughout the year, driving meaningful efficiency while continuing to invest in growth. And in Q4, we posted our strongest sequential net additions of customers with $1 million or more in ARR in 2 years, with deals over $1 million up over 50% year-over-year, a reflection of both improved sales execution and deepening enterprise platform adoption. I have never been more energized. What we are seeing now goes beyond a single quarter. We are at an inflection point in how software is built. Advances in AI are dramatically reducing the time and cost required to create software, and that has led to understandable questions in the market about how value will be created going forward. Historically, moments like this don't eliminate software. They shift where value is captured. Enterprises don't simply pay for code. They pay for trust, for operability, and for governance. the ability to run complex systems reliably, securely, and with full accountability. As the cost of building software falls, the value of platforms that can safely govern, orchestrate, and scale that software rises. And there is a second dynamic that I find even more exciting. When building becomes cheaper, more gets built, more processes get automated, more edge cases get addressed, and more systems become autonomous. That expansion does not shrink the need for enterprise orchestration. It increases it. And this is precisely the environment UiPath is designed to operate in. We enter this new agentic era with 4 advantages. First, a unified platform combining deterministic automation, agentic automation, and enterprise-grade orchestration with governance, security, and scalability built in. This is the full stack. It is what wins new logos and drives expansion across our base. Second, a powerful install base flywheel. Thousands of enterprises run mission-critical workflows on UiPath today, and within those workflows, there are opportunities for agents to be deployed and the overall process to be orchestrated. Third, 2 decades of enterprise trust and governance. Deployment experience that AI plus automation is expected to deliver accountability, auditability, observability, and reliability at scale. And fourth, deep vertical expertise with enterprise-wide reach, regulatory depth in the industries where the stakes are highest, paired with the horizontal ability to orchestrate across the entire enterprise. Let me spend a few minutes on each. Driver 1, our unified agentic automation platform. As AI makes intelligence more accessible, what matters is execution. Enterprises are getting answers to complex questions faster than ever before, and yet they still struggle to reliably execute complex cross-system processes with accountability and compliance built in. The goal now is to pair the insights they are getting with the actions and execution that our platform enables. Financial reporting, claims processing, regulatory compliance. These cannot be improvised. They must be institutionalized. Enterprise automation requires 2 modes: deterministic for precision and auditability, and agentic for reasoning and adaptability. Most vendors offer one or the other. UiPath is purpose-built to integrate both under a single control plane, allowing enterprises to move from experimentation to scale production-grade deployment. Most people think orchestration means agent-to-agent coordination. Real enterprise orchestration brings together agentic automation, deterministic automation, and humans, because that is how work actually gets done. We offer that and the full execution layer underneath it, governing how a transaction moves from start to finish and ensuring that it completes reliably every single time. This is what Maestro is built to do at enterprise scale. What makes Maestro uniquely powerful is its architecture. It is built on Temporal, the most modern workflow technology, featuring durable execution and trusted by the most demanding technology companies in the world. Workflows are defined in a way AI agents can generate and modify directly while remaining fully transparent to business stakeholders and auditors. In a world where AI agents are increasingly the ones creating and maintaining workflows, that distinction matters enormously. The customer results make this concrete. A US-based semiconductor company failed to deploy an agentic workflow with another vendor after more than a year of trying. With UiPath, they were successful in under 2 weeks, leading to a 7-figure expansion across Agent Builder, Maestro, and Test Cloud. Today, they run over 3,000 automations and have saved more than 2 million hours. And One New Zealand, who went from proof of concept to production grade pilot in 5 weeks, reduced a 4 to 5 day order to cash process to 10 minutes, and they are now scaling this across their B2B sales operations. With UiPath, they expect roughly 20 million in cost savings this year as they plan to further leverage the platform to support their broader transformation programs. Driver 2, the flywheel inside our install base. The most important story this quarter is the economic shift underway inside our install base. Customers are not experimenting with AI. They are expanding their operating model on our platform. AI product ARR, which includes Agentic, IDP, and Maestro, reached nearly $200 million this quarter, with strong growth fueled by Agentic. But the number I keep coming back to is this. The number of customers above 100K in ARR who have bought AI products grew 25% year over year, and they spend nearly 3 times as much as those who have not. Additionally, 16 of our top 20 deals this quarter included AI products. All of this is clear evidence that agentic automation is becoming central to our largest customers' roadmaps. Importantly, this AI growth is layering on top of a core unattended automation business that continues to grow. We are not seeing AI agents replacing deterministic unattended automation in production. We are seeing customers extending their processes with AI. A major US airline illustrates this well. Building on their deterministic foundation, they are now deploying Agent Builder, Communications Mining, and Maestro to automate procure-to-pay and supplier workflows, a blueprint for how customers move from task automations to end-to-end process orchestration, and how that journey drives platform-wide expansion. This is the flywheel. Every workflow automated creates new surface area for agents. Every agent deployed drives more automation, deeper integration, and broader platform adoption. Testing is another area where we see a significant and underappreciated expansion opportunity. As agentic workflows and applications sprawl, traditional QA simply cannot keep up. Forrester named UiPath a leader in the Forrester Wave for autonomous testing platforms in Q4 2025, with Test Cloud receiving the highest possible scores in 7 criteria, including vision, roadmap, and automation creation, orchestration, and execution. A global technology company is a strong example, standardizing their entire automation program on UiPath, expanding into Test Cloud, and planning to implement UiPath agents and Maestro to automate supply chain workflows. Turning to driver 3, governance. Building an agent is becoming easier. Making it enterprise-grade is not. Enterprise-grade agents require deterministic execution with traceability, exception handling, and audit trails that satisfy external regulators. We see this play out in how customers choose us. An American credit union selected UiPath as we were one of the only solutions to meet their strict banking, security, and governance requirements. And a European automobile manufacturer chose UiPath as the foundation of their agentic AI strategy, selecting Maestro because we could deliver enterprise-grade governance, error handling, and human-in-the-loop safeguards at the level their compliance standards demand. In both cases, governance was not a consideration, it was the deciding factor. And that brings us to driver 4, vertical depth. It's not just about governance, it's about knowing the domain deeply enough to manage and operate it at scale for real impact. That is why vertical depth matters more in the agentic era, not less. As building becomes easier, differentiation shifts to domain-specific workflow intelligence, especially in industries where the cost of getting it wrong is existential. At Vive in February, we launched agentic AI solutions, purpose-built for healthcare, targeting revenue cycle management, medical record summarization, claim denial resolution, and prior authorization. In line with that strategy, we acquired WorkFusion in February, bringing purpose-built agents for financial crime compliance with deep anti-money laundering and know your customer expertise directly into our platform, extending our reach into the highest stakes compliance workflows inside global banks. Healthcare and financial services are two examples of a broader strategy. We pair vertical depth with the horizontal reach to orchestrate across every function of a global enterprise, a combination that neither horizontal or vertical platform alone can match. And great platforms don't scale alone. Our partners are building practices, joint solutions, and go-to-market motions around our platform. Our expanded partnership with Deloitte is a strong example. Together, we launch agentic ERP, embedding AI agents into mission-critical finance and operations workflows. A Fortune 20 oil and gas company that is migrating to SAP S/4HANA is already scaling through the partnership, expanding test cloud coverage from 10% to roughly 50% on their SAP environment, while building new agentic use cases across the migration. Accenture tells a similar story. Together, we deployed the global agentic sales order entry solution for a strategic life sciences customer, reducing processing time by 1/3, unlocking automation for orders previously too complex to handle, and orchestrating autonomous agents, transforming the orders while navigating 150,000 exceptions. Before I close, I want to give you a preview of what's coming next on our product roadmap. Over the last few months, the world has changed. The boundaries of what is possible have shifted faster than most people expected. We have spent years building a unified platform for exactly this moment, and what it can now unlock with the next generation of coding agents, it's something I'm genuinely excited about. Our platform is evolving into one where coding agents can participate across the entire automation lifecycle. Agents will work with subject matter experts to discover processes and identify exceptions. They will work with business analysts to generate process definitions, assist developers in building automations, deploy those automations into production, and help manage them at runtime. The first capability of that vision ships in the next couple of months, and it targets a problem I hear in nearly every customer conversation. Their automation backlog is growing faster than their ability to build. The ROI exists. The executive sponsor
you.